Howdy, folks. Welcome back to the Stockcharts TV studio here in a beautiful, bright, and sunny and hot. We're not used to that in Seattle, Redmond, Washington. My name is Grayson Roze. I am the Chief Strategist here at Stockcharts.com. As always, thrilled and delighted to be with you for a bit of a different show. Now, we've been doing this top 10 stocks, top 10 charts to watch special for quite some time. But today, I'm missing my partner in crime. I got an empty chair over here. Dave Keller, not in the building. He's on this thing, he calls it a vacation. I don't know, something about going out and hanging with his family. I don't know what it means. But in any event, the show goes on. We are still going to bring you top 10 charts to watch for the month of July. I am still not sure how we've made it all the way to July. Feels like 2025 is just kicking off, but crazy first half of the year. It has been a big one for markets. It's been a big one for all of us who've been riding out this chaos, riding out this volatility. But we do have a market that is rocking and rolling back up near all-time highs. Crazy. Who would have thought that just a couple of months ago? So, of course, we got to drill into that market. We got to dig into that market and find the individual names that are setting up, the charts that are catching our eye, the things that we want to keep an eye on for the month of July. That's what we do here on this show every month. So looking forward to bringing you 10 of the charts that I am following most closely as we roll into the new month. Now, we're going to do a couple things before we kick that off. We are going to touch on sort of the conditions that we have in the market here. I want to pull up our market summary dashboard, make sure that we touch on kind of the context that we're picking these charts in. I also, though, want to remind you, before we get this show going, the tools and features, everything that we're using here to find these names, to track these stocks, to save those charts and organize those lists, annotate those charts, everything. The tools that I use on a daily basis, the tools that Dave Keller and the rest of our contributor group use on a daily basis, they are all reserved exclusively for Stockcharts members. So if you are not already a Stockcharts member, as you're watching this show, make sure that you're thinking about signing up. Visit Stockcharts.com, hit that big green button at the top, start your free 1-month trial. You're going to get to take advantage of all these tools and features that we're going to be showing off on the episode today. I do want to kind of spill the beans on something here. We've got a summer special coming up very soon. So this month, you're going to be able to actually save big on the Stockcharts account that you already have. If you're already a current member, you are going to be able to save on that Stockcharts account, extend that out to the future, get some good savings on your existing membership. Or if you're hearing this and you're saying, you know what, I'm not a Stockcharts member, but I should be. I want to sign up. I'd love to get a discount. Well, here's the thing. You can sign up for your free 1-month trial now. That's going to last you for, obviously, the next 1 month. But during that period, our summer special is going to land, and you'll be able to actually sign up for that full membership with that discounted price. So if you sign up right now for that free trial, you'll get 1 free month, and you'll get a discount when you take advantage of that summer special coming up in just a couple weeks. So we're going to have more about that on the site. We'll have more about that in our newsletter and articles and things like that. Stay tuned for more information. But definitely remember, sign up for a Stockcharts account if you're not already a current member. You'll be able to take advantage of these exact tools and features. Now, with that out of the way, I say we jump over to the market summary dashboard. Let's touch on kind of the context of this market right now, kind of the environment that we find ourselves in, and then we'll jump over to those top 10 charts to watch for the month of July. I'm putting on my glasses here because I got to read my notes. So here's our market summary dashboard. Obviously, a great place to scroll through, really drill into the markets. We've been highlighting this page a lot. There is so much here that helps you drill into every corner of the markets, really kind of down beneath the surface. But I got to pull up my notes because as I was going through this page in the last couple days, here's what stands out to me. We have right now a market that is breaking out to new highs. We have risk on behavior in pretty much every corner of the market. Everywhere you look, risk on is the theme that is standing out to me. We have improving breadth conditions. We're going to highlight that in just a second. We've got bullish sentiment everywhere you look. We've got bullish sector rotation. The sectors that are leading, the sectors that are outperforming are the ones that you want to see in a bull market environment. The new highs lists continue to expand. We've got so many stocks making especially 1-month and 3-month highs. But the list of stocks making new 52-week highs, new all-time highs, all of those continue to expand, while the list of new stocks making new lows continues to go absolutely nowhere. We've got offensive industry groups leading. We've got a Fed that's potentially changing stance this summer. We've got a lot more talk about rates starting to decline, things like that, the way that that's going to support the market. And I think most importantly, we hear a lot of talk right now about how the market is overbought. Obviously, it has been an insane rally off of the lows that we saw in April. But the reality is, we like to say this as technicians, overbought means up a lot. You're going to hear this a ton. The market is overbought. The market's extended. RSI is above 70. The reality is those overbought conditions can stay and can support a market that continues to go higher for a lot longer than we often think it can. So overbought, when a lot of people hear that, they think that the market has to turn around, it's extended, and it's got to start declining. The reality is overbought conditions can remain for a long period of time, and overbought conditions can simply lead to a little bit of consolidation before another leg higher. So when I think about this market, when I scroll through that market summary dashboard and add up kind of all of these different factors, this is a market that is incredibly strong and seems to only want to push higher, especially with the way that we're seeing sort of that risk-on behavior, different corners of the market that are working. When you see things like semiconductors absolutely flying, breaking out, it's not just that semiconductors are continuing to move higher. It's that some of these corners of the market are leading, but also kind of just starting to get going. A lot of these charts are just starting to break out. So I think that the next couple of months, certainly the month of July, seasonality is with us as well, but certainly the month of July and beyond. So much to like about this market. It is a great environment to find good names. As Dave Keller says, if he was sitting here in that chair, it's always a good time to own good charts, and I think this is a great time to own good charts. So scrolling through this market summary dashboard, that's kind of some of the things that I'm thinking about. We selected a 3-month time frame right here. You can see how far we have moved off of those lows over the last 3 months. This is a market that's trading above, in almost all cases for these major indexes that we like to follow for the U.S., trading above key moving averages pretty much everywhere. Short-term trend, intermediate-term trend, all up. Market factors of the last couple of months just absolutely as dark green as it can be. That is a thing that I like to see. I mentioned the breadth conditions improving. One of the favorite panels that I have on this page is our breadth board here that measures for all of these major indexes what percentage of the stocks in those indexes are trading above key moving averages. This breadth board is about as strong as you can see it. I do want to see more stocks continue to climb above their 200-day moving average, but we're already seeing that for the Nasdaq 100, the S&P 100, the S&P 500. I think, especially with some of the action that we're seeing today with small and mid caps catching a bid, I think we're going to continue to see that for some of these other groups as well. And the reality is, when you jump over to the charts of these breadth indexes, for all of these, this is a great feature of this market summary dashboard, being able to scroll through these charts that we've created for you. So here are those percentage of stocks trading above key moving averages for all of these indexes. When I scroll through this really quick, you see that all of those lines are continuing to move up and to the right. That is exactly what we want to see. Here's the S&P 500. Those breadth indexes, those breadth metrics that we like to follow, continuing to improve. So definitely a tailwind for the market. New highs, new lows list. We mentioned this just to touch on it again. One of my favorite ways to set this up here with the new highs and new lows panels right next to each other. Here's the new highs list. Here's the new lows list. You can see one is continuing to move higher. One is continuing to go absolutely nowhere. New lows list, very, very, very flat. We just don't have any stocks that are making new lows. And we continue to see more and more stocks making new highs. So it's not that we're seeing strength in just a small number of stocks. We're seeing strength across the board. We're seeing breadth really improve. Sentiment, as I mentioned, continues to improve. The VIX down in the 16s. The VIX is just getting its driver's license, as we like to say. And one of the things that I've been following, in addition to that VIX chart on this page, one of the things that I've been following is this positioning and exposure chart. So this measures how traders are positioning themselves in the options market with the put-call ratio there. This is focused on equities only. And then also professional money managers. How long are they? Or how short are they? So what's the sort of exposure, long exposure of professional money managers? In this case, we can see traders are very, very optimistic, very bullish, a little bit too bullish, I would say, kind of an overbought condition here for the put-call ratio, down in kind of the complacent zone, but still a sort of a positive for the market overall. And active managers in the NAAIM exposure index. Active managers are continuing to stay long in this market. 81% there, the latest reading from just a couple of days ago. So there's just in pretty much every corner of this market, there's so much to like. Things are behaving the right way if you are bullish, if you are optimistic. And something that we're going to touch on with a couple of these picks too. When I pull up a chart of, for instance, the S&P 500, let's do that right now. We'll pull up that chart of the S&P 500. One of the keys that I see with a lot of people is they'll look at how far we've moved off of the lows, right? This is a market, if we measure it, that's about 30% off the lows that we saw in April, at the beginning of April. That is a major, major, major move for the markets. But the question you have to ask yourself with a chart like this, is this a market that has moved 30% off the lows? Or is this a market that's moved basically nowhere, just about 1% above the highs over multiple months? I like to focus on new highs, and I like to draw these support and resistance levels and focus on kind of these horizontal lines. I'm always saying, you probably heard it on this show, I'm always saying draw more horizontal lines on your charts. The reason is because it forces you to ask this kind of question. Is this a market that's gone too far too fast, or is this a market that's gone absolutely nowhere over a longer period of time? That's a theme that we're going to come back to today with a couple of these different picks that we have, a couple of these different charts that we are watching. I'm thinking about it on the S&P 500. I'm thinking about it across the major indexes, but also thinking about it for individual names that I'm following. It is a great question to ask for short, intermediate, long-term timeframes. The idea of a chart that's just breaking out, even if it's moved a ton to get to that breakout point, it's a great question to ask yourself. Is this up a lot, or is this absolutely nowhere over a longer period of time? So we'll come back to that question for a couple of these chart ideas that we have. So with that bit of context out of the way, I think we jump over to some of these individual names that we want to follow for the month of July. Still can't believe it's already July. What a first half of the year it has been. Now, first up for me, we're going to do a couple of ETFs. We're going to do a couple of individual stocks. We're starting here, though. I've kind of organized our selections, our charts to watch into ETFs first and then some individual stocks. What's going to be interesting is that we've got some relationships between these ETFs that we're following and some of these individual names as well. So first up for me is going to be the FTXO Bank Index, the bank ETF. Now, this is a great, great, great example of exactly what we were just talking about. Is this a stock that has gone absolutely nowhere, or a stock that has really, really rallied too far off the lows for you to be interested in it? I would say banks are just getting going. Now, when I think about banks and kind of why banks are just getting going, obviously we have an administration that is a little bit more favorable to deregulation, specifically for the financial sector, specifically for the banking group. I think that is a huge tailwind, not just for this month, but really for the next couple of years. If we do continue to see more and more bank deregulation, a lot of these banks are going to be more freed up to kind of operate as they want, as they wish. And I think that works its way back to value for shareholders. So I'm looking at FTXO here. Technically, this is a chart that is just starting to break out. I love this thing on the weekly. So in this case, we're looking at a 5-year weekly chart of FTXO. And you can draw that horizontal line right across there very, very clearly. Still has a little bit left to go to get to all-time highs here. I think that's all-time highs. It might just be 52-week highs, but a couple percentage points left to get to new highs there. But definitely one to watch right now. I think this is one to watch for the next month. I think this is one to watch really for the rest of the year and possibly even beyond. On the weekly, I think that this breakout becomes incredibly clear. If we drill down into the daily, though, I like what I'm seeing on this thing on the daily. Again, that's that breakout that we were just looking at kind of over a longer term. We're also seeing a potential breakout here for banks on a shorter term time frame. So now we're looking at 1.5 years of daily data. Every candle on this chart is going to represent 1 day worth of trading. We can see that this has been quite a substantial rally off the lows for banks, up about 35% to get to this point. But again, we are just running into that resistance. I think we continue to push higher here for banks. I would love to see a little bit of consolidation. We're getting a pretty sizable day here, 2.25% up for this ETF on the day. I do want to see a little bit more consolidation here to kind of digest some of these gains. We're a little bit extended, I would say, in the very, very short term. But I still think that these sort of multi-time frame breakouts that we're looking at for banks, a really, really attractive chart to watch right now. The great thing to me about horizontal lines on your charts, it allows you to really think about the risk reward levels that you're taking. You can draw those stops so easily. You can think about risk and reward based on these levels. Just a really, really helpful way to think about the names that you are playing out there in the markets. Also got to point out at the top of this chart, we have a relative strength line. So this is going to show you, for all of the charts that we're going to look at, this is going to show you the underlying security versus the Vanguard Total Index, VTI. That tracks the total stock market. It's an ETF that I like to follow. Very similar to SPY or any of those kind of major market tracking ETFs if you're not familiar with it. But what this is telling us is this security outperforming or underperforming the total market, the total US stock market? In this case, we can see that over the last year and a half, banks have outperformed the total US market. Been a little bit of the opposite, though, here for the last few months. We're starting to see that reverse. If we draw a trend line kind of across those highs, we're seeing that this relative strength line is actually breaking a downtrend, starting to move to the upside. That's the type of thing that I like to see. So breaking out on the shorter term daily chart, outperforming the market. I like to see the relative strength. I want to see that continue to pick up. A little bit overbought here on the RSI, but I think this still has a lot of room left to run. Again, a little bit of digestion up here near highs, I think would be a very, very healthy thing for banks. So my first chart to watch, FTXO, the bank ETF there. Next up is going to be a theme. Now, I want to talk to you about kind of how to play this. I'm going to do something sort of funny. I've picked IHAK, IHAK, a cybersecurity and tech ETF from iShares. If we come up to our search box, though, and we type in cybersecurity, the thing that I want to point out here is there are so many ways to play cybersecurity. This is a hot corner of the markets right now, has been for quite a few years. And as a result, we have a ton of ETF providers that are going after this space. Obviously, lots of individual names as well in this space if you want to play the individual stocks. But if you're interested in cybersecurity as a group, cybersecurity kind of as a whole, when I type in cybersecurity up here in the search box, you can see the number of ETFs that we have. So I've picked IHAK because, again, speaking of horizontal lines and risk reward, I think the risk reward levels on this, if you do want to play it in the short term, are a little bit easier to manage. You can look, though, at something like CIBR, which has been running for a little bit longer, one of the strongest groups out there, strongest ETFs in the cybersecurity space. So many different ways to play this. If you like cybersecurity, definitely pour through a few of those different cybersecurity ETFs. You don't have to just look at IHAK. This is the one that I pulled up, though, because it has caught my eye as kind of a breakout trader, right? So we're looking at the longer term weekly. Again, kind of just pushing up to new highs, broke out of this kind of longer term base a little while ago, and is now running up to new highs. If we look at this on a daily chart, again, I mentioned the sort of risk reward level. So I'm drawing that support and resistance line kind of right across here at the approximately the 53 area. We're pushing up against there. We have seen a little bit of consolidation here above or kind of right around prior highs from December of 2024. I love to see this consolidation. I love that we've tested some key moving averages, especially the 50-day there in red, and we're getting a bounce off of this. Lots and lots of hollow candles here, which is a thing that I love to see. So we're getting a lot of intraday climbs for cybersecurity here. The relative strength is the weak part of this chart to me. So this is just an ETF that is not outperforming the way that I want it to. That said, if you go and you look at some of the other cybersecurity ETFs that are out there, we are seeing more relative strength, especially from some of those funds that are playing cybersecurity more specifically. Now, in the case of IHAK, we're bringing in a little bit more tech exposure, kind of outside maybe traditional cybersecurity as well. So that might be leading to some of this slight underperformance. But again, I think that the risk reward levels here, I'm looking for that breakout kind of above the 53 zone. I love, though, seeing these moving averages all trading in the right direction. If we add in the 20 down here, I'll make that a little bit more visible. If we add in the 20-day, we can see that this thing has just been riding its 20-day higher for quite some time. The 20 is above the 50 is above the 100, and the 100 is above the 200, though. The classic key moving averages that I like to follow, all in the right order. So this thing continues to move higher. I do think you've got some pretty solid risk-reward levels to manage against, to play this one. Definitely a space to watch for the month of July. Again, though, I would encourage you, look at some of those other ETFs that are out there. There's so many different cybersecurity funds. Lots of different costs on those as well. So be sure to check into to the expenses of those different funds. They are all over the place with some of those different funds. There's small ones, there's big ones. You got a lot to choose when it comes to those cybersecurity ETFs. But that space, definitely one that is ripe for the following for this month, and I would say also long beyond. Our third space to watch, our third chart to watch, is going to be kind of a similar to what we're talking about with cybersecurity. I'm giving you three options here for number 3. So I'm watching BITQ. This is a crypto industry innovators ETF. Now, crypto, obviously a polarizing topic has been for years. One of the things that I've always found so interesting, though, about the crypto space is that obviously there's crypto itself. You can play that space in that way, kind of a more traditional approach. But similar to something like gold, you can also play that space through the sort of pick and shovel approach, if we want to think about it that way. You can play crypto by going after crypto itself. You can also play crypto by going after the companies that are supporting that industry, the companies that are poised to benefit if crypto continues to grow and become more and more of an important part of our asset allocation picture and capital markets and all of that. So I've always thought that this kind of pick and shovel approach to crypto is a very fascinating one. Now, BITQ has been on my radar for years on some of the longer term lists that I like to check up on every few weeks, every month or so. Overall, over the very long term, I would say that this is a chart that's obviously still going sideways, still has quite a bit to prove. But if we think about this over the long term, we're starting to push up against some of those key levels, starting to push up against prior resistance, and we're doing so with a fund that has outperformed the market sort of broadly. Now, still underperformed VTI over a long period of time since inception, but in the shorter term, if we think about this over the last couple of years, last couple of months especially, this is a space that is continuing to outperform. BITQ is definitely one that has my eye. If it can continue to push up higher into this resistance, take out some of that resistance, and trade up to new highs. Now, what's interesting to me here too is we have rallied so far off the lows. If we go all the way back to the lows from 2022, this is a 540% rally here for BITQ. We are not overbought though on the longer term weekly RSI. This is a 14-period weekly RSI. Interesting to see that we've only been overbought on that weekly RSI a couple of times. So despite the huge rally, not overbought on the weekly. So some key levels to watch, some key levels to think about. Not too far overbought. And on the daily, this is where I think this thing really shines. Similar to some of the charts that we've been looking at before, a really beautiful breakout here. I love the risk-reward levels that you can draw across this chart. Support and resistance lines are clear. And I will say on a name like this, I love to find charts that have sort of two levels of support and resistance. So in this case, I would be looking across this chart saying, here's kind of the lower level breakout that we need to see from BITQ. If BITQ can trade above kind of the $19.5, maybe $20 mark, it's kind of making that lower level breakout. Now, we still have a little bit of overhead supply in the shorter term, on kind of the shorter term daily. We still have a little bit of price action that we need to work through, and that's actually about a 13.5% gain off of that 19.5 level. So even if you trade this thing off, if it can make the breakout above that kind of lower level resistance line, and we trade back up to new highs, you're still looking at about a 13, 14, 15% gain. So a nice little move there. But it gives you a second level to play if you do take this trade. So I'd be looking at a move, at a breakout here for BITQ, looking to see that continue to push higher and take out that higher level resistance there on the daily. I love to see the relative strength out of this. It's a space that just continues to outperform. And speaking of, an administration that's kind of in favor of, banking deregulation and the impact that that's going to have on that space, we have an administration right now that's a little bit more favorable when it comes to crypto. So I think that's a theme that we're going to continue to see, work for months and probably years to come if that really does hold. If we do see the Trump administration continue to sort of act and behave more favorable for crypto, I think that's a theme that can continue to work for years ahead. So on the long term, I think this is a really interesting space to watch. On the short term, though, I think this is a great chart to watch. Moving averages getting back in the right order. I do want to see a little bit more recovery there. I would not be surprised to see us digest a little bit of this price action here, chop around just a little bit more. We got a little bit of chop just below those levels. You could almost draw a third resistance level down there below. So a little bit of chop there. I do like to see that. I'd like to see a little bit more chop before we make this breakout. But I also like to see the volume picking up on this move higher. That's interesting. And again, on that daily chart, on that daily RSI here, not overbought. I like to see that. So lots to like here, I think, for the crypto industry innovators ETF. And that's that kind of approach of, instead of going after crypto itself, go after kind of the pick and shovels approach. Go after the companies that are going to benefit from the growth in that space. Now, I mentioned, though, with this third pick that we were going to give you a couple of different ideas. So BITQ is one that I'm definitely watching. Again, I think on the long term and on the shorter term, a really interesting chart to keep an eye on right now. The downside with that fund, it is pretty expensive. If you look up the expense ratio on BITQ, it's definitely on the more expensive side. A little bit larger, but a little bit more expensive. So I'm giving you a couple of different options. Similar to what we did here with cybersecurity, there are a lot of different providers that are going after the crypto space, whether that's playing cryptos directly or this approach to kind of the companies that are poised to benefit. So a couple of other options that are kind of doing a similar thing. We have STCE, that's Schwab's approach at kind of a crypto theme. Now, these don't have as much trading history, which is part of the reason that I put BITQ ahead. But a really similar concept here. So you can see the fund came online in 2022, has outperformed since inception. I do like to see that. I like to see the trend here on the weekly. And if we jump into the daily, very similar look and feel to the BITQ chart. Outperforming on the daily, we're seeing us kind of push up to that lower level of resistance. I like to see that. Like to see the RSI not yet overbought, still some room to run there. Volume, not as much as I would like to see here. I'm not a huge volume guy. Would like to see a little bit more volume on this, but STCE, definitely another sort of space that you can think of if this kind of pick and shovel approach to crypto is intriguing to you. Finally, we've got FDIG. That's Fidelity's approach to crypto industry and digital payments, kind of all wrapped into one. So a similar fund, kind of similar to what we saw with the cybersecurity fund IHAK, how it kind of brings in a little bit more outside of just cybersecurity. Fidelity is doing that here, pairing crypto industry and digital payments. So a really interesting fund. I think that this is the cheapest of the bunch. Might be pushed out by Schwab, but those are quite a bit cheaper than BITQ if you look up the expense ratios on those. Very similar charts here, though. So three kind of flavors. The relative strength on FDIG, not as nice as the others. Do want to see a little bit more relative strength out of a space like this. If you're playing that kind of aggressive risk-on space, I want to see the ones that are really catching a bid from investors, really sort of picking up favor. But a very similar chart here for FDIG. So a couple of different options, but I think that the crypto space overall, definitely one to watch for July and beyond. And specifically this idea of some of the providers that are benefiting from that continued love for crypto that we're seeing. We're seeing that on in a sort of a narrower view. We're seeing that with something like Robinhood, something like Coinbase as well. Two individual names that are absolutely flying to the upside, doing big things, and obviously stand to benefit from crypto. So if that concept of kind of playing some of those spaces makes sense to you, you got a couple of different flavors of funds that you can use to go after that. So our third chart to watch is kind of a split between three, but definitely keep an eye on crypto in the month of July. We're going to move on to our fourth pick. This is going to be Homebuilders. Now, a little bit of a different one, But when I think about home builders right now, and when I step back to that weekly chart and I take a look at this, especially when we do this on an unadjusted basis. So by default, we're going to be looking at adjusted charts, adjusted for dividends here on Stockcharts. But down on the Sharp Charts workbench, we can scroll down to that little checkbox, uncheck adjusted for dividends, and we can think about this on an unadjusted basis. That's going to take dividends out. When I see this chart and I draw, again, those horizontal lines across, I'm just using the inspect tool to do that right here. But what we can see is a very clear breakout, a retest of that we saw earlier this year, and now we're starting to get a bounce. Now, what's also interesting is we can draw this as a cup and handle. It is almost a near perfect cup and handle on the weekly there for home builders. We then made the breakout. We got absolutely smacked back down at the start, sort of end of last year and the start of 2025. But we're now bouncing off of that prior resistance. Now it turns support. That's classic support and resistance behavior that we want to see. We're now seeing a bounce for home builders. And specifically, at the start of the show, when I mentioned potentially a change in behavior for the Fed, a change in rate policy for the Fed, a group like home builders obviously stands to benefit from declining rates. If we do see rates come off those highs, if we do see the Fed start to lower, that is only going to benefit small caps and mid caps and groups like home builders that are a little bit more rate sensitive. So I look at this chart right now and I see a space that has definitely been weak, a space that is not outperforming, a space that doesn't exactly do what I like to see generally. But I also see a space that's kind of screaming, wait and see. Just watch, we're coming back. So home builders, I think specifically on a weekly term time frame, a really, really interesting chart to watch right now. When we jump over to the daily, again, I'm looking at this as a kind of a reversal. A little bit of a different play for what I typically like to do, but that weekly chart really, really catches my eye. Now, this is kind of a false breakdown on the weekly, right? So we can draw that support and resistance line kind of across there around the 98 level, let's call it. And if we think about the price action that we've seen for the last couple of months as kind of a false breakdown, we're getting a huge day for home builders right now, 4.8%, 4.79%. Big, big day for home builders right now. Obviously, with some of the news about the Fed potentially changing its stance on rates. But this is kind of starting to look like a false breakdown, right? We draw those lines across, and there's plenty of price action for this thing to still work against. The 200-day, I think, is what you got to really be worried about here. If we do run back up to the 200-day, if we get any negative news about Fed policy, I think that's going to smack this thing back down. But still, when I think about home builders and when I zoom out to that longer-term weekly chart, it definitely catches my eye. So I would be watching for a hold of some of those levels. Specifically, I would say about the $100 level. I think that's a key level to watch right now for home builders. One thing I want to stop and mention here, when people draw those support and resistance lines, it's so tempting to get down to the penny, right? It's so tempting to think about support and resistance as 100.22. I like to think about support and resistance as a zone. In reality, I wish that we were just drawing all those as big rectangles across the charts. Because for me, when I look at this chart, it's not about one specific dollar level down to the penny for something like home builders. It's a range. I would say anything kind of within this range right here, sort of 100 down to maybe 98, maybe even widen it a little bit, say 102 down to 97. Within that range, I think that's where you need to be thinking about that support and resistance. So think about your support and resistance lines as levels. Think about them as zones. Think about them as ranges. I think that's really helpful. Think about more the spirit of supply and demand, the spirit of support and resistance. It's not as much about the sort of behavior down to the individual penny. It's about how we're trading around key ranges. One of the best ways to do that, to be honest, is to zoom out. Again, thinking about things over a longer period of time. When you zoom out to that longer term weekly chart, it becomes really clear that we should be thinking about support and resistance in terms of ranges. So easy to do that here on the daily chart for XHB on the weekly chart. On the daily chart, a little bit more difficult, but think about your support and resistance levels as zones on this chart, and I think it's very, very helpful. So XHB, though, definitely one to watch. I'm looking for a turnaround here in that relative strength line. Again, this has been in an absolute downtrend. We're seeing this as a space that's just been underperforming for quite some time. But with this bounce that we're seeing, with this potentially being kind of a false breakdown, with rates changing, I think XHB, home builders, definitely one to watch for the month of July and probably the rest of the summer. Again, if we do see Fed policy change a little bit, I think this is going to be one to watch for quite some time. Next up, we are going to look at our first stock of the day. This is going to be Morgan Stanley. So I mentioned there was kind of a sort of a relationship between some of these picks, right? Our first pick of the day was banks. We looked at banks as a chart to watch for the month of July. Here, we're looking at a sort of specific financial industry pick, Morgan Stanley. Now, I love this thing on the daily. I think this is a fantastic chart. And we got to go back to that concept of, is this a chart that's up a lot, or is this a chart that's gone absolutely nowhere? It's easy to look at Morgan Stanley and say, this is a financial name that's up 51% off the lows. That is crazy. That's gone way too far. I would never buy a stock that's up 50%. But you can also look at this and say, this is a name that's gone absolutely nowhere since its highs on February 7th. So thinking about this as a stock that's gone absolutely nowhere, I love this breakout. I love that we're seeing those moving averages, again, all in the right order. We're trading nicely above the 20. A little bit too far above the 20, I would say. I do want to see us digest these gains. We've been up quite a number of days in a row here for Morgan Stanley. So I do want to see us digest these gains just a little bit. But relative strength is a thing of beauty here. We're continuing to outperform the broader market. And I think most importantly on a relative strength chart like this, we're starting to break out on a relative basis against the total market. It's not just breaking out on price, it's breaking out on price relative as well. So kind of a double breakout there, definitely something to watch. A little bit extended off the 20, but we do have that 20 above the 50. We have the 50 above the 100, and we have the 100 above the 200. All those moving averages in the right order. The trend is going in the right direction. If you're betting that Morgan Stanley is going to continue higher, well, multi-time frame moving averages are telling you, yep, this thing is moving higher. Volume has been a little bit light. We are a bit overbought here on the RSI, so that's especially why I want to see us kind of chop around, digest some of those gains, get a little bit more chop, a little bit more digestion up here near those new highs. But I think there's a lot to love about Morgan Stanley. Now, one thing I would be cautious of is earnings coming up. So middle of July, we do have earnings. Obviously, banks going to kick us off with earnings season this month. So earnings are definitely kind of one thing that's sitting out there in front of a name like Morgan Stanley for me. I would be looking to sort of let this thing chop around a little bit, maybe even let it get through earnings, but definitely one to watch this month. A big old financial name that is continuing to move higher. And when we think about this on a longer term basis as well, this is a name that is breaking out of a sort of consolidation range after a breakout that we saw last year. So draw that support and resistance line across here. We saw kind of a similar thing actually to one of the other charts that we were looking at. This is kind of a retest on the weekly, a breakout of a retest of that breakout level on the weekly chart here from Morgan Stanley. Now we've pushed all the way back up to those new highs, and we're starting to break out once again. So I like the long-term uptrend and sort of the breakout behavior on this name as well. And if we zoom out to that weekly, we're seeing that relative strength breakout is actually not just on the daily, it's also on the weekly. This is really a sort of a key price relative breakout that we're seeing here for Morgan Stanley. So our first name coming from the financial sector, just like our first ETF there. MS, I think definitely one to watch for the month of July. Our next name is going to be from the cybersecurity space, FTNT. This is Fortinet. Now, on the daily, again, a similar kind of chart. I love trading breakouts. You know that. So we're drawing those horizontal lines. We're drawing those support and resistance levels. Falling a little bit today, getting smacked in the face, and that relative strength has not been great on Fortinet, I will say. But I do like the ascending triangle here. I do like to see us also bouncing off of that 50. We can make that a little more clear if we do maybe 1 year of trading. Zoom in. Well, let's zoom in even further. We'll do 6 months of trading. We can see us really bouncing off of that 50-day moving average today. If we close above that, I think this is going to continue to sort of pinch its way higher, draw that ascending triangle on here, and I think that breakout on Fortinet is setting up really nicely. Earnings pretty far out as well. I like to keep referencing this chart. Really nice to be able to see those earnings dates on the top. If you don't have this turned on your charts, this is the full quote. Down here in the settings area, make sure that you got full quote checked. That's going to give you even more information about those different names. So earnings, a nice long way out. Cybersecurity space continues to be just an absolute winner. We saw that with IHAK and some of those other funds. So I think Fortinet is definitely one to watch right now. I want to see that Scooter score get a little better. Scooter in the 40s, not the thing that I like to see. But considering that we're really kind of digesting these gains, digesting these support and resistance levels, maybe digesting those gains off of April, we've run about 30% off the highs, so definitely a lot to digest. I like to see the chop up here near new highs, and I like to see that those lows are getting higher. That is one thing that I like to see. So that ascending triangle kind of pinching this thing up to the breakout level, that's something that I absolutely love to see here. Now, if we think about Fortinet on the weekly, let's take a quick look at that. This is a name that's outperformed over a long period of time. And if we zoom back even further, we can see has heavily outperformed the market over a long period of time. So what I'm really saying is, this is sort of a consolidation within a longer term uptrend, similar to some of the other names that we've been looking at. That long-term uptrend in a great space like cybersecurity makes a ton of sense to me. So a lot to like here on the daily chart for Fortinet. I think there's definitely a lot to like here, and definitely a lot to watch. Also, love to see that momentum is not extended. We're seeing that consolidation, and we're seeing RSI hold really above the 50 level, definitely above the 40 level, but seeing momentum hold kind of in that bullish range. Plenty of room to work here. Lots to like about Fortinet. Definitely one to watch for the month of July. Moving on, we're going to hit something from the semiconductor space. I mentioned semiconductors early on as one of those industry groups that's continuing to lead. You just feel good when semiconductor names are leading. That's something that Dave Keller loves to point out. When semiconductors as a space are working, you just kind of feel good about the market. It's that risk-on behavior that we were talking about. So here's LRCX. This is Lam Research starting to break out to new highs. Again, a great chart to think about. Is this something that's been rallying off the lows by, let's measure that up, 74% off the lows? Or is this a chart that's gone absolutely nowhere for about a year and a half? I would say this is a chart that's gone absolutely nowhere for a year and a half, as it's now getting pinched up by buyers, sent higher up there near new highs while it outperforms the market. You can see that relative strength line moving to the upside. Love to see the relative strength coming out of this name. Semiconductors has a lot of group strength, right? Just a great theme to play crypto, a great theme to play AI. So we're seeing so much love right now, especially for semiconductors. Finally moving back to the upside, we got names like NVIDIA climbing to new highs. We got those semiconductor ETFs climbing to new highs. It's a space that continues to move. And if you kind of think of it as a space where a rising tide lifts all boats, I think semiconductors has a lot to like, a lot of tailwinds there for semiconductors overall. Lam Research, one of the names that definitely stands out to me as far as kind of managing risk. So again, focusing on that breakout. Love to see the moving averages in the right order. Do want to see those continue to move higher. This is a name that has been chopping around for quite some time. So I want to see us digest some of these gains just a little bit more. That's going to be kind of a theme with some of these breakouts. We're a little bit overbought here on the RSI on the daily. So would definitely love to see us digest some of these gains. But again, when you think about this on the longer term weekly chart as well, a beautiful uptrend and has this kind of stair-step pattern to it. So we kind of saw a similar breakout on the weekly and then a retest of that just a couple of months ago. Now we've rallied back and we're trying to take out those new highs. This is a long-term uptrend that you can play here with Lam Research in the short term on that daily chart. Lots and lots to like about this name. One of the other things that I also like about this is that the Chaikin Power Gauge rating is a bullish rating right now. So one of our plugins that we have for Stockcharts, the Chaikin Power Gauge, you can access that in ACP. You can also access that in the members dashboard. I love to see the bullish rating there for the Chaikin Power Gauge. I like to actually use the chart comments area and kind of keep that noted. So you can see down here, I've got Power Gauge rating is bullish as of yesterday for Lam Research. It's a really interesting model. We'll open that up here. Hit the dashboard. Let's take a look at Lam Research. I've actually got this loaded up as one of the panels on my dashboard. Right in here, you can see the Chaikin Power Gauge. This is a plugin that you can add to Stockcharts. But that Lam Research rating there, bullish for the Power Gauge rating there for Lam Research, bullish. Really nice readings across a couple of those different factors. So this is Mark Chaikin's kind of multi-factor model, his rating system for individual stocks. Financials, earnings, technicals, and experts, but he breaks that down even further, has tons and tons of different sort of metrics, consistent metrics for each of these, and spits out a really nice, easy to follow rating. So when you see something like a bullish rating for Lam Research here, combining all of those different sort of key metrics that we like to follow into sort of one easy to track value. The fact that the Chaikin Power Gauge rating there is bullish on Lam Research, and some of that technical behavior is exactly what I like to see. Lots to like here, I think, on LRCX, especially with the group strength. So that is going to be our 7th pick for the month of July. We're moving on to Dell Technologies. Dell, such an interesting name, so much interesting history with this, coming public and then going private, coming back onto the public markets now. Earnings way out in front of this thing, not until the end of August, so I really like to see that. Now, this is a little bit below the breakout level that I would like to see. So I think this is definitely one to watch for July. I think it's not quite there. I do like to see the pickup in relative strength, though. Again, kind of breaking that long-term downtrend. And if we annotate this really quickly, let's draw a trend line on this. This is exactly what I like to see. Draw that trend line across some of those highs. Think about your trend lines as kind of a zone as well. I think that's another kind of hot button for me. Think about your trend lines as a zone and not a specific price. This is clearly breaking a really, really obvious downtrend, I would say, for a longer period of time. Now, if we also draw another trend line kind of across these lows here, we can see that this is kind of a false breakdown there in April. Absolutely got slammed with all the craziness that we saw in the month of April at the very beginning. But I would say that's kind of a false breakdown there for Dell. Now pushing back up into new highs, breaking that downtrend that we've seen since kind of the start of the middle of 2024. Lots to like here, I think, on Dell. The trend line behavior, the way that it's kind of trading against some of those trend lines, against that downtrend, something that I like to see. And I love that we actually consolidated kind of right next to that downtrend as well before sort of breaking out above it. Moving averages getting back in the right order, not quite there yet though. That 200-day definitely sitting above the 50 and the 100. A little bit overbought, but not too bad. I like that we're digesting some of these price levels there. So definitely, I would say one to watch for the month of July. I still think that this has a little bit of proven to do. But when we think about Dell also on the long term, again, another one that has that beautiful long-term uptrend and some of that kind of breakout behavior that I like to see. So broke out back in 2023, had a beautiful, beautiful run higher. It's now been consolidating for the last really year and a half, and is starting to potentially make another breakout on that chart. One thing that I did want to highlight for Dell here, it's a great opportunity to stop and kind of measure some of these levels. I'm talking about this because I hear it so often from so many folks who see these names that have done kind of what the market is doing right now, have moved so far off the lows. So when you look at Dell back in 2022, off of those 2022 lows, it got back to new highs, right? And that was an 82% run from the 2022 lows back to new highs. So when this thing broke out back in 2023, it had already moved over 82% to the upside off of those 2022 lows. A lot of folks would look at a moment like that and say, I'm not buying a stock that's up 82%. That's craziness. But from there, Dell went on to make a 220% run higher after that 82% run just to get back up to the breakout level. So this is something that I love to remind people of. Again, a name that has moved a big percentage off of the lows may also have gone absolutely nowhere over a longer term time frame. This is why moving between those different time frames is so crucial. So when I think about this breakout now, you think about an 82% move leading to a 222% move. I would say a similar thing right now. We've moved 80% roughly off the lows for Dell. So I'm looking at this breakout saying, well, what if it does it again? What if it prints another leg higher here, makes that breakout maybe a little bit higher, around the 130 level, makes that breakout and continues to run higher. So don't write things off just because they're way off the lows. Let them chop around, let them consolidate there at new highs. But a stock that is pushing its way up to new highs, breaking out, taking out some prior resistance levels, that is a sign of strength. That is the type of thing that I love to see. So our 8th pick there, Dell, I think across a couple of different time frames, definitely one to watch for the month of July. Next up is going to be our 9th pick. We're getting down to the end. This is going to be Roblox. Now, this is a very different chart from me. Roblox is such an interesting one to think about. This is a name that has absolutely just been a rocket ship for quite some time. The RSI on this thing, I'm going to pick this chart apart for just a couple of minutes. The RSI on this thing is just wildly overbought. That is just absolutely crazy. This is a name that has run, if we go all the way back to sort of those 2024 lows on this chart, it's a year and a half chart. This is a name that's run 240%. It is absolutely flown higher. Off of the April lows, this is a thing that has run 100%. It's just trading above key moving averages. It's just been absolutely cruising. It's overbought. Sure, it's outperforming the market, but man, this is just so extended, right? Well, once again, if you jump out to the longer term weekly chart, this is a name that's kind of just starting to break out of what I would say is its IPO base. Outperforming the market, sure, but really kind of made that, I would say stage one, if you're familiar with Weinstein analysis, really kind of made a stage one breakout a little while ago, has run higher, but is now just starting to break out on a longer term weekly chart. So I find this one so fascinating when you bring in those multiple time frames. Is this a chart that's gone way too far, or is this a chart that is just starting to break out again on that longer term? I would say this is one to watch right now because we got to see how it trades around those highs on the longer term weekly chart. Still has some room to run to all-time highs, even if it breaks out of this kind of lower zone. So about 37% if we do break out here, if we can sort of solidify that breakout and continue to run higher, about 37% up to all-time highs here for Roblox. But definitely one to watch. I think it's really interesting to see how some of these names, especially you're seeing this all over the place. Companies that went public in 2021 got absolutely slammed as the market cooled off in 2022 and have now been basing and starting to make that move higher. This is a relatively young public company. Roblox just hasn't been on the public markets for very long. So I think thinking about how this is going to trade around some of those new highs. They've sort of started figuring out how to be a public company after a couple years there on the market. They're starting to break out of that IPO base. Definitely one that I think could be one to watch. I was thinking about this from another perspective as I was putting this list together yesterday as well. I've got a new daughter at home. She's just coming up on a year old. And it's funny, I've heard this from parents for so long. Parents who have a kid who's using Roblox software. They say, oh my God, Roblox is so dangerous because your kid asks for some $3, $5, $10 thing on their phone, and you love your kid. You got no choice. You got to buy it for them. I always say, what do you mean to stop? Tell them, don't. You can't have the thing. I'm not going to buy that for you. Well, now that I got a daughter, I'm sitting there thinking, yeah, if she wanted some Roblox thing on her phone, I'd probably say, yeah, okay, sure, I love you. You can have it. So I think this is definitely one that's got some stickiness to it with kids. And sort of a captive buyer there with parents who want to buy things to keep their kids entertained. So an interesting one when you kind of step back from the chart, step back from the fundamentals, and just kind of think about the product, think about the company, think about the space. Definitely an interesting one. Might have a bright future ahead of it here. But starting to break out to those new highs, definitely one to watch. We are going to move on to our 10th and final pick, our 10th chart to watch for the month of July. This is going to be Shopify. Now, Shopify is a just fascinating company for so many reasons. I think a lot bigger than people realize. I think a lot of people are engaging with Shopify and they don't even know it. So many of those sites you visit to buy a T-shirt or hats or whatever you're buying on the internet, so many of those merchant sites are powered by Shopify, sort of behind the scenes. You might not even really know that you're using Shopify, and you might be using it on a daily basis or a weekly basis. Technically, on this chart, kind of similar to Fortinet, I love to see the consolidation around these new highs. I like the risk-reward levels that you can draw on this. Some really clear support and resistance zones on this chart. I'm kind of drawing that around the 115 level, that's that dash green line. But you could also kind of draw that up just a little bit higher to kind of maybe the 120. 115 to 120, I think, is sort of the breakout zone for this chart. Riding that 20-day moving average higher, though, we now have the 50 trading above the 100, which is trading above the 200. So those moving averages are in the right order. I love the relative strength on this. Finally picking up. We're seeing this as a name that is outperforming. This is a big company too. You can see the market cap of this, 150 billion. Might be one of those companies you go, Shopify, I don't even know what they do. Or if you're a little bit more in tune with tech, a little bit more in tune with digital payments and different things like that, you might be a little bit more familiar with this. But a name that has struggled in the last couple of years, again, as the market cooled off in 2022 and into 2023, but starting to find its feet again. On the daily, I think there's a lot to love about this thing. That sort of shorter term trend off of the April lows, I think, is very, very clear. You could draw a very steep ascending triangle on this thing, but a clear breakout level to watch there. Love to see that the RSI is not overbought on this chart, but holding steady above 50. I really, really like that momentum behavior there on the RSI for Shopify. Just continuing to work its way higher and working on that breakout. Chopping around at this breakout level, I think, is crucial. If we can see this thing chop around a little bit and get a nice push above to new highs, you do have a little bit of that kind of two-level breakout that I've been talking about. So even if you drew that level closer to the 120, you've still got that kind of breakout to those higher highs, about 8.5% above. So kind of builds in, a couple of whether you want to use that as a price target or a spot to add. If we can test that even higher resistance and make a breakout through there, so you kind of have that multi-level breakout that I personally like to trade. Lots to like on this chart though on the daily. Now, if we jump out to the weekly, and actually I want to jump out to a really, really long-term weekly. I'm going to jump out to a 15-year weekly chart. This is a very, very long-term view. But you can see how huge this run for Shopify was. So we're not talking about all-time highs here. The all-time highs for Shopify were back in 2022, well, I guess late 2021 actually. But we're close. We're getting back close to those all-time highs. We still have some room to work to get back up to those all-time highs around 176. But you can see the long-term trend on this thing. Huge, huge uptrend. We saw an absolutely tremendous smackdown for Shopify here in 2020 from 2021 into 2023. But we have rallied quite substantially to get back up. When I see this chart, I think about consolidation, right? We're in a long-term uptrend. We're not that far into Shopify being a public company, only about 10 years. So I look at this chart on the long-term weekly, and I see something that is just starting to break out and resume potentially that long-term uptrend. When I look at the outperformance on this thing, though, you look at the relative strength line, huge outperformer here in Shopify. This is a name that when it works, it loves to fly. So I'm looking at this thing on the longer term chart and thinking there's some key levels to watch right now. I love the sort of long-term relative strength view finally starting to move back to the upside. But when we look again at that daily chart on Shopify, lots to like here on the daily chart. I think you got some key levels to manage risk against. Do want to see volume pick up a little bit though. If we can continue to sort of pinch into those highs, hopefully you'd see a nice big volume day to break this thing out to new highs, start to push its way higher. So a lot to like here though on Shopify. Trading those breakouts, always an interesting approach there. Shopify though, definitely one that catches my eye. Again, multi-time frame analysis. I'll pause here for just a quick sec and say, by the way, all of these little buttons that I keep clicking on the left side of the chart, these are called style buttons. If you want to set these up, we did a show on this pretty recently. You want to set these up to have multiple time frames. It makes it incredibly easy. So if I want to look at a daily chart here on Shopify, I can look at a daily chart. If I want to look at a 5-year weekly chart, a 7.5-year weekly chart, a 15-year weekly chart, I've set up my style buttons with different time frames over on the side. Makes it incredibly easy to flip through the different sort of chart settings, chart templates that I like to use in my own approach. This is a great example of one of those features. You got to be a Stockcharts member to take advantage of something like this, but they are highly configurable. Such a time saver, a really kind of nice efficiency booster there using those style buttons. Something that Dave Keller uses, something that all of our contributors use, those style buttons on the left side of your sharp charts. So that's it. 10 charts to watch for the month of July. We flew through them, talked a little bit about the environment that we're picking these names in, talked a little bit about what's going on in the markets, but also flew through a couple of ETFs, flew through a couple of stocks. Hopefully you had some fun tuning in, joining me for these 10 charts to watch, 10 things that have come across my screen, 10 things that are on my radar for the month of July. It's fun to do this and pick 10. We usually split, 5 and 5 with me and Dave. We'll be back next month, of course, with Dave to do another episode, kind of like we traditionally do. But this is fun, picking 10 names with you guys, sitting down to talk markets and share some of the chart setups that have caught my eye as we head into the new month. I want to remind you again, you got to be a Stockcharts member to take advantage of some of these great features like chart lists and style buttons and chart styles. Save those chart templates that matter to you. Got to be a Stockcharts member. But we got that big summer special coming up very, very soon. So keep an eye out. We're going to have more information on the site and here on the YouTube channel as well. We'll have more information about the summer special that's coming to Stockcharts. But you'll have an opportunity to save big. If you're not a current member, sign up now for that free 1-month trial. That's going to roll you into the summer special. You'll get that free month, and then you can also sign up, take advantage with a nice discount. So visit stockcharts.com. Look for that big green button there on the homepage. It's going to make it easy to sign up there for your free Stockcharts account, your free 1-month trial. I want to thank you again for tuning into the channel here, Stockcharts TV. Remember, subscribe to the channel. We got so much great content coming at you on a daily basis. So many fantastic contributors sharing their thoughts, sharing their market insights, sharing their process and exactly what they're looking at out there in the market, how they're looking at things, why they're looking at things. It's all here on the Stockcharts TV YouTube channel. So subscribe down below and give this video a like too. That helps us out. Leave us a comment though. We'd love to hear from you. What's on your list? 10 charts that you're following for the month of July. What did I miss? What are we following as a group there? Share it with us with a comment down below. I want to thank you again for tuning in. Again, my name is Grayson Roze, Chief Strategist here at Stockcharts.com. It's been fun to be with you. I'll see you again very soon for the next one. But until then, chart on, my